SoFi stock just skyrocketed, jumping over 15% in a single session and hitting fresh highs. But the big question is, are we looking at the start of a massive long-term run, or is this just a hype-driven spike that could fizzle out? Today, I'm taking you deep into the numbers, the company's latest moves, and the hidden factors that could make or break SoFi's next chapter. The market loves a good rally, and right now SoFi Technologies is delivering one of the most exciting stories in fintech. After its latest earnings report, the stock didn't just rise, it exploded, climbing to around $25.11 at its peak. That's the kind of move that gets Wall Street analysts, retail traders, and even casual investors talking. But before we get caught up in the hype, it's important to break down why this happened, what's fueling it, and whether the momentum can last. SoFi's journey started back in 2011 as a simple idea helped people refinance student loans. Fast forward to today, and it has transformed into a fully licensed digital bank and a financial super app. From loans and credit cards to investing, insurance, and even crypto, SoFi is building a one-stop money management platform. This all-in-one approach is one of its biggest selling points that keeps users inside the SoFi ecosystem and makes switching to competitors less appealing. Now, let's talk numbers. Because this latest rally was not just about market hype, it was fueled by some seriously impressive earnings. In the second quarter, SoFi reported revenue of $858 million, up 44% from the same time last year. Earnings per share came in at 8 cents, beating expectations. And adjusted EBITDA surged 81% to $249 million. Membership growth was massive, 850,000 new accounts in a single quarter, bringing the total to over 11.7 million members. On top of that, the company raised its full-year guidance, now expecting $3.38 billion in revenue and $370 million in net income. These are the kind of numbers that make investors pay attention. One of the most interesting developments is SoFi's push into private market investing. For the first time, everyday investors can access private companies like OpenAI, SpaceX, and Epic Games directly through the SoFi app, with as little as $10. Traditionally, this kind of investing has been reserved for high-net-worth individuals, so SoFi's move could be a game-changer in democratizing access. This not only opens a new revenue stream, but also strengthens its position as an innovative disruptor in finance. SoFi is also making a comeback in the cryptocurrency space after pausing operations in 2023. Soon, users will be able to buy, sell, and hold major digital assets like Bitcoin and Ethereum, as well as use blockchain-powered tools for things like international money transfers. The re-entry into crypto could help attract a younger, tech-savvy audience that wants both traditional banking and cutting-edge digital assets in one place. Behind the scenes, SoFi's Galileo platform is also quietly becoming a growth driver. Galileo provides tech infrastructure for other financial institutions, and it saw revenue grow 15% year-over-year to nearly $110 million. With AI-powered features like the Cyberbank Connecta, virtual assistant, and partnerships with major institutions like Banco in Argentina, Galileo is helping SoFi diversify its revenue beyond consumer lending. Of course, we have to be realistic, there are risks. SoFi operates in a fiercely competitive market alongside giants like PayPal, Block, and traditional banks like JP Morgan. Its valuation is also on the high side compared to older financial institutions, meaning expectations are already priced in. Rising interest rates could slow borrowing demand. Regulatory changes could impact operations, and new ventures like crypto and private funds come with execution risks. From a technical perspective, the recent breakout past $25 was a big bullish signal. Trading volume spiked, showing strong institutional buying. But after big rallies, pullbacks are common. Key support levels to watch could be around $23 and $21 if the stock holds above them. The uptrend is intact, but if it breaks down, it could invite more selling pressure. So what's the verdict? On the pro side, SoFi has strong growth in members and revenue, an expanding product ecosystem, innovative new offerings, and a tech platform that could scale massively. On the con side, it faces intense competition, macroeconomic uncertainty, and the risk that some of its new ventures may not deliver as expected. For long-term investors who believe in SoFi's vision of becoming the go-to financial super app, this could be a buying opportunity even after the recent rally. But for short-term traders or more cautious investors, it might be worth waiting for a pullback before jumping in. SoFi's story is still being written, and this latest surge could be just the first chapter of a bigger run, or it could be the peak before a correction. As always, do your own research, know your risk tolerance, and invest accordingly. What's your take? Will SoFi be the next big fintech giant, or is this just a hype wave? Let me know in the comments, and make sure to check out my other stock market breakdowns so you can invest with confidence.